Alright, I'm going to make a quick video here showing the importance of using the X and Y axes on a chart. Many amateur traders and retail traders only use one side of the chart or the other. Some use time and some use price. Majority only go off of price and they don't use time. So, I'm going to show you a couple ways that I use time and price together to trade the markets. Here is a 400 tick chart with a standard MACD momentum indicator. And tick chart is going to come into play as well. Over here on another monitor, I will have my charts opened up showing a 1600 tick chart and a 15-minute. For this demonstration, let's just use the 400 and 1600 tick chart. Two time frames, a minimum of 2 times the length. So 400 and 1600 would be 4 times. Alright, let's go back to the 400. Using time and price, we're going to find some entries. Alrighty, I have a strategy using Fibonacci's. They are trend trading strategies where you would buy pullbacks using fibs. So, alright, the market went up, and just like all markets, whenever they go up for a certain period of time, they need to consolidate. They need to take a break. Just like human nature, if we go sprinting, we run a mile, we need to take a break before we can run again. So markets do the same thing because markets are controlled by humans. So, they took a break, and now we finally got that breakout. We got a breakout here. We got a pullback in that breakout with oversold momentum. That came around the 12:30 time frame. Around the 12:30 time frame, we also had a low tick, which is very important. So now, by using Fibonacci's, we are using the time, or we are using price, and by using the momentum, the tick, and the 1400 time or 1600 time frame, which I'm getting ready to use, we'll be using time. So at 12:30, the market is once again oversold. We have a low tick in its range. We have a low momentum in an up channel with the moving averages pointing upwards. What happens at 12:30 on the 1600? We are above the moving average, broken out, and heading up with momentum as well. So that is a valid long, a great way to trade using time and price. Alright, see if we can do the same thing in a consolidating pattern. Alright, the market sold off all morning, and then it starts to trade sideways or consolidate. So we want to use a couple factors. We want to use price and time. What is the right time to get in at a certain price? Obviously, price is very, very easy to see here. It came down to this 13.35.75 several times. What we want to look for is a proper time to get in. So we come down here and we use momentum for one. Here's a low. Here's the next low. Here's a low. Here's the next low. But momentum is showing that this market didn't sell off enough and it's ready to bounce up. So at that low, we have higher high in momentum at 801. 801, we're looking for a low tick to buy. We have this up channel or in a tick, and at 801 it came down and touched it. So that's a good buy entry to go long. That is a quick, easy example of how we use time and price to trade the markets. If you don't use both, you're going to be chopped in and out of these markets just like the rest of the retailers. That's it for now. You got any questions, email me. Alright, this is Adam signing off. Cheers.